So I think we're going to run this as a fireside chat format. So I'll be asking Miles here a few questions. And I think also if Miles, you want to defer, you can also ask me the questions as well.
Yeah, and I hope we'll also have some time for questions from the audience. And for those of you that don't know, I think the wine is open. So feel free.
Excellent. So I think the first sort of question here is, obviously, Miles, you've been with HigherOne since the very beginning of HigherOne over many, many years. If you could maybe talk a little bit about what it was like in the beginning, at the very beginning of when you were starting the company, and I guess the founding story there.
Sure. Some of you may have heard this before, so I apologize if you have. But for those that haven't, HigherOne was created by myself and some other undergraduates. We met at Yale. People imagine we were drinking buddies, but despite my comment earlier, we became drinking buddies after we started the company. We came together building the Yale Entrepreneurs Society, knew we wanted to build a company together, felt like we had good intersection in terms of people having different strengths and weaknesses. And we looked at a bunch of different opportunities to solve problems in the world, but we kept coming back to higher education, our experience as students as being a real inspiration for the company. And we started in financial services. We've expanded into software, and we help generally institutions of higher education lower administrative costs and increase graduation rates. So it's been an exciting ride.
Got it. I guess at the very beginning in the role, right now you're chairman and you were previously COO. How did you feel that role would change for you over time? Maybe starting when you guys were maybe 50 employees or less, and then as you sort of scaled up, did you feel any big changes for yourself in particular?
Certainly, there's a lot of changes. You scale at different levels. We used to joke that we would start at the top and work down, and I think the willingness to bring in other management was something that helped make us successful, to add experience to the team. Originally, in sales, and as a CEO, we brought in for 10 years. Those types of things, I think, helped scale the business and grow. But in terms of my own role, I was a chief operations officer for 13 years. And the same title, but that evolved over time, what that means. And I'll give you an example. Part of our service is providing bank accounts for students and ATMs on campus. And so the first, 10 ATMs, I was the project manager who was managing the vendors, getting the ATMs installed. So
did you put the cash in yourself?
I didn't physically go on campus, but I was the project manager coordinating all this. It might be 1,000 miles away. And then I was managing someone who was doing it and then managing their manager. And there's a lot of shifts as you go through that. And that's just one particular function, but I think you can imagine that applies to a lot of different things. And I think that is one of the advantages that I had as a founder, not having experience, running a 500-person company, but I could rely on the fact that all of the functions that we were doing, I had a hand much earlier on in helping to build that function and grow it. So it does give you a huge leg up as a founder to sort of know where, how all the processes were set up and where the cracks are. I think Rob Glaser was talking about that earlier. Sort of a house that you used to live in type thing.
Yeah. So real quick, I think moving on and switching gears a little bit into the sort of COO role and being part of the founding management team in the context of raising money for your company. Because I know right now you guys are a public company, but like a lot of the startups, you literally started with, I guess, maybe friends and family type of round, and then went through some institutional fundraising. Can you talk a little bit about what that was like in your role when doing, let's say, fundraising at the entrepreneurial stage?
So when we were really early on, we were basically fundraising for the first 4 years, almost continuously. I mean, we had some named rounds, but the way it felt emotionally, it was just constant. And we divided up prospect lists, and among the founders, we basically said, you have these 20 people, you have these 30 people. So at different times, different people among the founding team had more explicit responsibility for fundraising, but it was really something that we were all doing. In the same way that the presenter earlier was talking about how everyone in your company becomes a recruiter. In a certain period of time, for us, the entire management team was part of the fundraising process.
Yeah, so if you're not recruiting people, you're recruiting money, basically.
Yeah, and I sometimes think of it, the early stage of a business is you've got to solve that problem of getting investors, customers and employees in that product, right? And all four of them kind of depend on each other. Got to somehow figure out how
Make them all fit
make it
together.
all happen.
Yeah, got it. So I guess, if the story here is, at the beginning, you're always recruiting people, recruiting money, especially in the first, call it 4 or 5 years or so of the business. I guess, a lot of the dreams of entrepreneurs is to one day take the company public. And I know right now you're chairman of the public company. Can you talk a little bit about what that process was like? If my memory serves me correctly, I think you guys went public maybe 2 or 3 years ago, roughly speaking.
Yeah, so we took the company public in 2010 with a traditional IPO process, and fascinating to see how the sausage is made. If any of you are considering it, I'd love to talk to you offline. Learned a lot, and there was things I wish people had told us going through the process. Learned a lot, and that's part of what I wanted to do in running a public company. But my first love is the earlier stage of startups. That's why I started SeClickFix, and that's what I intend to do in the future, and part of the reason I'm phasing out my role at HigherOne.
Oh, excellent.
And I'd love to hear from your perspective, and you grew a company, I'm sure IPO was on your mind. How do you make the decision to sell versus go for a public offering?
Yeah, so quick background for the people who aren't familiar. MoPub was a mobile advertising company. We were standalone, and now it's part of Twitter. I think at the time, as you're going through fundraising, we went through Series A, Series B. We were contemplating a Series C raise at the time when the Twitter transaction occurred. And this was approximately Q3, Q4 of last year. I think for us, the broader strategic story was that it made sense. But I think from my personal background, having been an investor before I was an operator, I think I kind of got a sense of what it would be like to be a public company, for me personally, and for management personally. I think as part of that calculus, knowing what it's like crossing that chasm, I think from my perspective, if I was the benevolent dictator of anything, I would stay private forever. I would never go public. That's my personal view. But that's kind of how we sort of thought about it at that time. And I think the last question before we open it up for Q&A here is, I guess, reflecting on your background and your role. If there were, I know there's a lot of entrepreneurs in the audience here. If you had maybe one tip or trick that you want to share with everybody, do you have one off the top of your head? Broad question.
Yeah, broad question. Don't forget to have fun.
I think mine was you have to have a good sense of humor, because I think echoing many of the sentiments from earlier today, there are a lot of ups and downs, and the thing that keeps you going through the down cycle is you have to have a good sense of humor. So,
I think in terms of a key to success, maybe I've had a chance to reflect on that, is I think that the best teams have short-term pessimism but long-term optimism, right? So a sense that what we're doing is important, it is achievable, we can solve this problem, it's worth it, but we better fix X, Y, and Z tomorrow before it all falls apart. And if you can find that within yourself, that's great, but at least find that in a co-founder so that you've got that tension within the team, because if you're missing either of those ingredients, you won't be successful.
Excellent. So I think with that, I think we have a couple minutes left. If there are any questions in the audience, please feel free to ask them.
Yeah, I was curious, at what point do you guys switch off QuickBooks and start putting real apps in place? When do you have to grow up as a client?
So the question from the gentleman here was, when did you guys have to switch off QuickBooks and put a real finance package in? I think for MoPub, we were always on QuickBooks. We've always been on QuickBooks. And I will also say, I can't name the names, but there are some there are 2 publicly traded companies right now that I know of in our space where they didn't switch off of QuickBooks until literally right before the IPO. And so I guess my simple statement related to that for all the entrepreneurs in the audience, for that specific question, it feels like you can stay on QuickBooks forever until you go public. But do you have a comment on that?
I think this is maybe getting into some weeds, but I think maybe it's what you want us to do. I think QuickBooks is great up to a certain number of customers or transactions that you're billing. So I think it's going to depend on your type of business, right? Maybe it handles a few thousand invoices that you're doing, or transactions per month in terms of revenue. But if you're going to get above that, you're going to want at least some kind of other subsidiary system. And then certainly from a controls perspective, Sarbanes-Oxley, I think you're referring to, it doesn't cut it.
Yes, you.
I'm going to extend that question a little bit. So when do you think we go from bookkeeper to controller to an actual CFO?
So the question is, when do you go from bookkeeper to controller to actual CFO? Miles?
And why?
And why?
Well, I think my perspective on that is it's going to depend, right, on the business, what you're doing, how much money you're raising, what your balance sheet's going to be like. But if you're starting a business that's going to be loaning $1 billion, you probably better have a pretty senior finance person for the very beginning. If you're doing a business like C-Click-Fix, I was doing the accounting, a full-time job at HigherOne, doing the accounting on the weekends for C-Click-Fix for the first couple of years before we got a controller type. And so, a software business like that with, dozens of clients, you can go quite a long time with even just outsourced bookkeeping or someone doing it on the side.
So John, a little off topic. What do you think is the happening in the next few years from the last bit?
Sorry, could you repeat that again?
What do you think is going to happen in the next couple of years from the mobile ad space?
The question that the gentleman said was, what do I think will happen in the next couple of years in the mobile ad space? I don't know for sure because I can't tell the future, but I think the easiest way to think about it is to look at what happened on the online desktop ad space back in 1994, 1995. And I'll just spend 30 seconds here on this, but you look back then, the big player today arguably is Google, where I used to work, and the Google product is DoubleClick. But before Google bought DoubleClick, it was a standalone company. But how did DoubleClick itself get formed? It got formed through a series of acquisitions on the desktop space. There was an acquisition of a company called NetGravity, which did ad servers on the desktop space. And there were a bunch of other acquisitions as well. And so this story, in a sense, has already played out. And we kind of, if you define the end game for the desktop spaces today, which I'm sure you talk to a lot of mobile ad people or desktop people, everybody debates this all the time, but if you look at the facts over the last, call it, decade and a half, the story kind of has already played out. So using that as a guide, you can kind of look at how, hey, if 2 decades ago was the boom of desktop, today we're arguably in the middle of the boom of mobile. You can kind of use that as a framework template to view how things are going forward. But in general, there's growth. I don't think there's any controversy about that. It feels like the big issue now is whether people believe monetization will increase or not. I tend to be a bull in this camp, but everybody has different opinions, but that's what I would say about that. Yes? Yeah, I'll take that one real quick. The question was, how many times did you guys almost go bankrupt before succeeding? And I guess what I would say is, I can personally think of at least 4 times in the history when we were a private company where I was incredibly stressed out. And in that role as CFO at that time, you have to be very careful who you express your stress to because you don't want to freak other people out. But I can think of at least 4 times when I was very stressed out because in my mind, what you were alluding to was a serious potential path that we could have walked down. So I think that's what I would say about that. Miles, do you have a view?
One of the things that was important to us at HigherOne was open communication. And in fact, one of the things that we did was to be very open about our financials. When we are a private company, we are actually more open with employees about our financials than as a public company, which is one of the great ironies. Even though we strive to still talk about them with employees, but as a private company, we're much more open with our employees about it. And so employees knew how close we were getting to running out of money on a number of occasions. On one particular occasion, we were negotiating, closing a venture round, and we had one more payroll in the bank. And we actually issued pink slips to all of our employees saying, we hope this round closes, and we'd love for you to continue working. We're just giving you official notice. We only have one more round, one more payroll in the bank. And in fact, one of our employees from that time, still has his pink slip frames. He insisted it was, printed on pink paper. He was very proud of it. And today, he'll still show it to you if you ask. So, we didn't lay anyone off at that point, so that was good.
Any other questions in the audience here?
I will add, we did spend the last $3,000 in the bank on a party. It wasn't planned that way, but it just turned out there was holiday time. It was time for parties.
Well, it turns out alcohol reduces, stress and anxiety. So it's a good use of capital if anybody is thinking about that. Yes?
You said that there are some things that you would have wanted to know before you went to public. What are those things?
So
I'd be happy to talk to you offline about that. This is being recorded.
He's still involved. So, well, you can't talk about it. I'll talk about it. And I feel like I have some context to talk about this because in a prior career, I actually worked in private equity. And one of the pitches as an investment professional that I would give to a public company CEO or chairman is basically, hey, back in 2000, whatever, for example, Sarbanes-Oxley got passed. And Sarbanes-Oxley was passed with the context of preventing another Enron. Unfortunately, the amount of regulations that it puts in place is very detrimental, for example, to a private small company because you still have to pay for big public company costs. And that's literally one of the pitches that I would use, go out to public company management and say, look, this is very painful. You guys know your company. Other people don't know it as well. Maybe it's time to go private. And so speaking from a prior career in private equity, that is one specific example that I think resonates with a lot of public company management. Miles can't comment.
But there's two things I wanted to say. It seems like there's a lot of interest in this topic. One is, in terms of nuts and bolts of the IPO process, and then I'll talk more broadly about impact on the company. So in terms of the IPO process, we had a top tier investment bank and others, multiple investment banks from Wall Street involved, and what I thought were very qualified attorneys, and I think they were. But one of the things that coming from an operations background, I thought was really lacking in the IPO process was a true project manager, and not having been through it before, not knowing what the roadmap was. I couldn't really play that role, but looking back on it, and even during the time, I said, who's project managing this? We're sending out urgent requests, and even on small things, urgent requests for signed, notarized documents from our sales guy who's on the road. When he was at home 2 days ago asking if he needed to sign anything, we had said no. And now we're telling him he has to run around and find a notary while he's on the road in, Minneapolis. So, there were a bunch of silly things like that, but there were more important things that I think, had there been a true project manager. Yeah. And when you ask the investment bankers, they say it's the lawyers. The lawyers say, well, the investment banker, lawyers don't really have a discipline of project management the way I think about it. So that was one. Two, more broadly, impact on our culture. I alluded to earlier, one of our values is communicating openly. Yeah. And being a public company, particularly Reg FD, requires disclosure to the market broadly all at the same time. Material information, you can't selectively disclose material information. And we took the unusual step of making all of our employees considered insiders subject to our insider trading policy. And therefore, in theory, it gives us more flexibility to share information with employees. But it still, as a practical matter, has had a chilling effect on our willingness and ability to share important information about what's going on in the company broadly with 1,000 employees because of the risk of leaks and selective disclosure, which would be a problem with Reg FD. So that's meant there's been less sharing of information than there used to be within the company, and I think that's had a negative impact on the culture, and it's something that I have not personally been excited about. We spent a lot of time thinking about before choosing to go public and put in steps like that insider policy to mitigate that, but it's still a significant impact, I think.
I think in summary, maybe one difference between being private and being public is being public, you're subject to all types of securities laws that are good. There's reasons why they're there. But from the perspective of being management or employees of a company, it puts in a lot of sort of mandated rules that you normally would not have to deal with, and that's a clear difference of being private versus public. Hopefully that addresses your question.
And I really felt it the week or so after going public, I went to a barbecue, and someone said, "How was your work week?" And I said, "Oh, something, I don't even know what to answer." He's like, "Because I'm an investor." So that also really drove it home too. It's like always on the clock.
Great, so we're out of time, but I want to thank Miles and John for coming up and speaking.